All right, so let's get started. Welcome to the Tuesday night technical difficulty webinar. We're going to talk about the stock market and an intro into trading. How to get started in trading. We're going to talk about some of the mindset that goes along with trading. We're going to talk about um, why most people fail, how to have a trading plan, is charting important, and then we're going to open it up for some questions. So who is Jason Brown, right? So I'm your host tonight. If you've never met me in person, because there's people from, all over, I'm guess, joining the night. And if you've never met me before, I just want to kind of share a little bit of my story with you. So I graduated from Wayne State University right there. That's me holding up that little piece of paper that I'm so excited to get because I didn't have to study anymore, at least not in a classroom setting. And I majored in finance here at Wayne State. So I actually went to school for engineering and realized I didn't want to be an engineer after getting all the way through the course and having like 8 classes left. So I switched to finance and became a finance major. So husband, hey, this is recently added to my title. I was married in May 2011, so got an anniversary coming up, or I'm sorry, 2013. My wife is nudging me here. And I like to consider myself a good friend, right, to all of you. So here's just some cool pictures I want to share with you. Maybe you've been to one of our seminars, but that's me training at the Microsoft store. It's a couple of people that's been to some of our seminars at the Microsoft store. It's a seminar we did in Royal Oak here. So, this isn't our first rodeo. We've trained in person, done webinars before, and I really love connecting with other traders. I really love connecting with you guys who are thinking about getting into trading. What does it take to start trading? Because trading can be a lonely thing sometimes, and it's really nice to be able to reach back out to people and break down the barriers that keep people from getting involved with making the type of money that can come with trading, because either everyone's charging a ton of money for the information, or the people who have the information just plain don't want to share it. So I love sharing some of this knowledge. I say some because I also run a business as well with training and coaching this stuff. So this is one thing, I don't know how often I'm going to share this, but I think it's important to know, is the person you're listening to, have they ever made money in the stock market? I just think that's important because you have mentors and then you have advisors. And advisors are people who never really did what you set out to do. They didn't walk a mile in your shoes, but they're giving you advice on how to get it done. And when I was 23 years old, I took a $10,000 student loan. Some of you know that story. And I turned it into a 6-figure trading account. So you can see right there, that account grew to $113,000. That was back in 2003. I was just like I was 23 years old. And since that time, we've done this a few times over. We've also lost a lot of money too, right? So I've lost more money than most people make in a year at some times, but I've also made that type of money as well, as you can see here. And, full disclaimer, this isn't a webinar saying, hey, you're going to make 113,000 bucks. Again, I've made over 6 figures from trading in the stock market, and I really didn't start out with 6 figures. I started out with 10,000 when I first started trading this account. And you don't necessarily need that type of money to get started trading. We'll talk about, what it takes to get involved in this game, right? So since then, I've started a website. Some of you may be familiar with it, which is the brownreport.com. That's my stock trading website, in which we do 3 to 5 videos a week, and we talk about what trades we're getting in, what trades we're getting out, what to buy, what not to buy, and kind of coach through the process. You'll see a seminars button right there for live seminars, and then we have private seminars as well for our members. Now, this slide is titled $1 million. So I would like for you guys to type in the box, A lot of people say, I'd love to make $1 million. I want to be a millionaire. I want to be a millionaire. I want to do this. Maybe I should play the lottery. And I don't think most people know what it takes to make $1 million. So I'm going to show you guys something that I don't share often, but this is a nifty tool that I created. If I want you to type in the box how much you think you would need to make $1 million, and also share with me the time frame. So how long you think you need in much in dollars, and how long would it take for you to make $1 million doing whatever you think you could do to make $1 million in this lifetime. So again, how much money do you need to get started? Whether it's, hey, I want to buy McDonald's franchises, I want to start a car wash, I want to start a home-based business. How much money do you think you need? How long do you think it would take you to make $1 million? You guys must be thinking really hard. You haven't thought about this before. Or throw some figures out there. How much would you like to make in the next 5 years? Jim says 10 to 20 years. How much money would you have to start with, Jim? And anyone else can chime in here. If you wanted to make $1 million or $500,000, Eileen says 10 years. How much money do you think you'd have to start with? The average seems to be 10 to 20 years. How much money do you think you'd have to start with? So Paolo says 1 to 2 years doing stocks with an aggressive strategy, also minimizing risk. Start with maybe 20,000. Jim Grass says good decision, making and timing 20,000. So here's the reason I asked you that, guys, because you're on this webinar because there's something about the stock market that interests you. There's something about this webinar. You said, hey, get started trading in the stock market. Sounds like a great idea. How about I join this webinar? And, I look at that $20,000 figure that some of you are typing in that box, and I think to myself, how many people in this lifetime have $20,000 just sitting aside to put in the stock market? And the answer is not many. And I want you to look at this screen here. This is a chart, a compounding interest chart that I put together, and this kind of helps shape some of the decisions I make. But if you started with just $4,000 and you could earn 10% a month, so you start with $4,000 and you could earn 10% a month. If you look at this, in 5 years, year 5 right here, in 5 years, you would have $1.2 million. I don't know about you, but that really excited me once my mentor showed that to me. And the reason that's exciting is because most people don't have $20,000. And to know that, hey, if I could discipline myself to come up with $4,000 and just get really good, and I mean really, really good at making 10% a month, not being greedy, not trying to make $4,000, $5,000, make $10,000, I mean, not 10,000, 10% a month. Look at what will happen in year 1. You mean month 1. You'd make $4,400. You'd make $400 profit. Month 2, you'd make $840 in profit, right? And at the end of year 1, your $4,000 would have grown to just a mere $12,554. That's about $8,000 in profit. That doesn't seem like a lot, but if you can stay disciplined, not take the money out, not go buy a new car, not go shopping, right? Ladies, no new shoes. Joking. But, not spending that money, you can see in year 2 you'd come in with about $13,000, but at the end of year 2 doing that same regimen, starting to look a little bit nicer, right? $39,000, $399. Think about this. Maybe your goal isn't to go out here and be a millionaire, but what if you could start with $4,000 and in 2 years have $40,000 to put on a down payment for a house? What if at the end of year 3, you could have $123,000 to put down on a house? Or by year 4, you can just pay for almost a $500,000 house in cash. And maybe you don't have that type of money. What if you only have $2,000 to start with? Look at what happens. In about, this is year 1, this is year 2, this is year 3, year 4, this is year 5. You can become a $500,000, right? You can make over $500,000 just starting with a little measly $2,000. I think I saw Jim say my budget is plus 1,000. Maybe he means he's starting with 1,000. I'm not sure. But what if you started with $1,000? And I want to spend some time on this because I just want to show you what is possible. Even with $1,000 right here, you can see at the end of 5 years, you could have $304,000, 482, right? So here's my point. Here's why I keep dropping the number. What if you only had 500 to start with, right? Would you be okay with $152,000 in your bank account, in your retirement account, in your house buying account at the end of 5 years? And the point I want to make with is not how much you have to get started. It's about getting started. Getting started, learning this industry, and starting with what you have. I can't tell you how many people come up to me and say, I only have $500. That's not going to do anything. I only have $1,000. That's not going to do much. Trust me, if you get started with something and you follow the plan and you follow some of the things we're going to talk about tonight, you can look up 2, 3, 5 years from now and you can have a totally different lifestyle. You can have a totally different time frame for retiring. You can have a lot of different options. So I like to share that and just open up your mind at what's possible with even something as small as $500 or something as big as $4,000 and being a millionaire in 5 years. And most people, if you think about it, you get a tax return. You make some extra money working a side job, different things like that. Instead of taking that tax return and buying clothes and buying a new car, could you put aside $1,000, $2,000, or $4,000 to look up and have your life be different a few years from now, right? So let's talk about the mindset that it takes to win in the stock market, because if you don't get this thing right here, you'll never be successful, not just in the stock market, but you won't be successful in anything and not trying to make $1 million. And the reason the mind is so important to get right is because everyone on this line, unless you've been trading for some time or you have some other business where you're doing very well, you've always been taught, go to school, get a good job, climb the corporate ladder. Maybe you were taught, savings is the way to make a lot of money, right? Put some money away for a rainy day. Maybe someone told you to open up a CD, right? And they said, hey, open up a CD at a bank and earn a half of a percent. And so when someone like myself shows you how I took $10,000 and turned it into 6 figures in less than a year, or I show you how with $4,000 in 5 years you can make $1 million, sometimes that's a little hard to believe. And you got to work on your mindset because, no one shared with you how to make that type of money. They've always shared with you how to make maybe $50,000 at a job. Maybe if you get a second job, you can bring in an extra, $10,000 working at Target or working at, Macy's or something like that. But I'm talking about long-term sustainable wealth, having your money work for you, which leads me to how do you need to think about this industry, right? So you need to have long-term thinking. And what is long-term thinking? Long-term thinking is the chart I just showed you, 3 to 5 years. You need to have long-term 3 to 5 years thinking. If anybody on this line has been to college, you came into college expecting to give up bare minimum 4 years. You came in willing to give up 4 years. And not only did you come in willing to give up 4 years, You came in willing to go in debt $35,000, $40,000, right? So why wouldn't you be willing to invest $4,000 or $500 or whatever the case may be, and have a 3 to 5 year game plan where you may never have to work again? Or you just like what you do, you love working, but maybe you got some different options. You don't have to go to work worrying about getting fired, getting laid off. You have some different things that are working for you and your family that you don't have to worry about, that the next person in the cubicle is stressed out about, right? The second thing is investing in yourself, right? So you come to a free webinar like this, and we put up that $4,000, and you think, all right, that's all I need to do is start with 4,000, and I'll be a millionaire in 5 years. Well, that's not going to happen without first investing. And then the other word I want to point out is you. Invest in you, right? So you taking time to listen to this webinar tonight, you're investing in yourself, right? You could be watching The Real Housewives of Atlanta. You could be sleep. You could be doing a lot of different things right now. But you said, let me invest in myself and at least hear what this is about, right? And investing in yourself, there's a couple things that's going to come with that, right? Finding a mentor. Maybe you're going to need a nice computer, right? If you're going to be trading, you're going to maybe need a high-speed internet connection. You're going to need a cell phone. Why? Because most people probably work a full-time job, and maybe you need to submit a trade during the workday, and you can't do it on your work computer, or you might get fired, right? So all those things are going to be part of investing in yourself. And then the third thing is community. Community is very big to me, and here's the reason why. When you leave this webinar, you're going to talk to someone, and you're going to say, I was on a webinar, and this guy told me with $4,000 in 5 years, if I stayed focused, if I followed the plan, I could make $1 million in 5 years. And you're going to go home, or you're going to get off this webinar, and you're going to call your girlfriend that's a housewife. You're going to call your best friend that lives in the basement, or you're going to call your brother that works as a manager at maybe a affluent company but has no idea how to get paid in the stock market. And maybe that person's going to be supportive, but 9 times out of 10 they're going to say, that stuff doesn't work, that's for the other people, no one makes that type of money, blah, 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 all this negative stuff. And so you need to get around a community of people who are going to be thinking just like you, right? You need to get around other people like Jim, like Paolo, like Eileen. You're going to need to get around people like Carla, people who were willing to take the time and invest in themselves and go at this like you. And those are the people who are going to push you, who are going to share trade ideas, who are going to give you insight when you make a bad trade, when you make a wrong decision. And you're basically going to have to think outside the box. So why do most people fail in the industry like this? Well, kind of the opposite of the long-term thinking slide we just looked at. Well, some people get in this and they say, what? Well, I'm going to give it 3 trades. They'll say something like, if I don't make money in my first 3 trades, well, this doesn't work for me. Or they get in here and they say something like, I'm going to take $500 and I'm going to grow it to $1 million. That's fine. The only problem is they say, I'm going to do it in 1 year. That's absolutely not realistic, guys, right? So it's not realistic to come into this industry and think, oh, just by sitting on this webinar and next week I'm going to take my chump change in my cookie jar and I'm going to turn it into $1 million. That's short-term thinking, not going to happen. Lack of commitment is the other reason that people fail in the industry like this, right? So what does commitment look like if you're a trader? Commitment looks like sometimes getting up at 7 a.m. and looking at some stock charts. Commitment looks like sometimes being up from 10 to midnight, maybe figuring out what stocks you're going to trade tomorrow, reading some news, finding out why the market sold off today, watching a video that comes from me if you're part of my membership or my subscription, things like that. So that's all going to be part of commitment. Commitment is going to be on your lunch break. Instead of you going to Panera Bread and eating for an hour, you go to Panera Bread, and 30 minutes of that is you whipping out your laptop, checking the stock market, seeing if you should close out a trade or seeing if you should get into a trade or seeing what's going on with the market. That's commitment. And most people lack commitment, right? It's too hard. It's too much work to become wealthy. One of my mentors told me, if you think being successful is too hard, try being broke, right? That's really hard. Going at it alone. So this is the other reason why most people fail. When you go at the stock market alone, when you have a bad day, right, you're going to look like something like this. When you have a bad day and your account takes a dip, you start thinking, I knew this didn't work for me. This must be for the other people. I was stupid to think I could ever make money in the stock market. Trust me, it's happened to me before. I've lost a ton of money, even though I've made a lot of money. And these thoughts start to creep in my head. I start thinking like, oh, does this really work? Maybe I was only right that one time, and it was a stroke of genius. It was a luck, a flip of the coin. I got in at the right time. You start saying all this stuff to yourself when you're going at it alone. And that's why you need community. You need to speak to a coach, a mentor, other traders. Hey, what did I do wrong? Hey, were you in that trade as well? When did you get out? I think I'm going to get out as well so that we cut our losses, right? That's what community provides. And then you need to set up a trading plan, right? Each one of you that's on this call, and you can tell me your answer when we open up the line later, but why are you here? What are your goals, right? Some people may just be, I want to quit my second job. Maybe you want to quit a second job and you're like, I would just love to find out how to make extra $500 a month so I don't have to quit a second job. Some of you may want to replenish your retirement, right? You want to retire and maybe you took a dip, you've been laid off with the economy, you don't know how to get back to the level where you were before the economy took a dip and retire. Maybe that's your goal, right? Some of you want to just buy a new car, which is totally fine, right? I like to buy some toys too with some of the money I make, or take a vacation, right? All these different things. The point is, you need to know what your trading plan is and what your goals are. If you don't have any goals, the problem is when it comes to a realistic time frame of when you want to accomplish these goals, you don't have any, right? So you don't have a time frame. You don't know how much you need to get started because you don't know how much you want to make. So you don't even know how much to start with, right? So everything falls with figuring out what your trading plan is and what your goals are. If you don't have any plans and any goals, you don't know if you should buy extra software. You don't know if you should get a mentor, get a coach. Should you join a trading community? You don't know because you don't have any goals. I'm just here to see what happens, right? And it's funny, I was just writing this stuff out and realized this was the next slide, right? How much money do I need? What's a realistic time frame? And what's your plan to get there, right? So let's talk about charting in the stock market, right? So how do you get started making money in the market? I'm here to tell you that the majority of how I make money in the stock market is by reading charts, okay? Now, this stuff is going to sound like Greek to you if you've never heard it before. But it's no different than a math class in school, right? The first day you showed up at college, the first day you went to algebra or trigonometry, you thought, what in the world is this stuff, right? I remember the first time a teacher showed me this. She told me that A squared plus B squared equals C squared. Now, for a moment, I was just like, what are you talking about? But as you look at the picture, you start to think about it that, hey, if you square this and square this distance is right what you get. Or maybe put a different way, they say the shortest distance between 2 points is this line right here, right? This C squared line, right? But if you didn't know how to look at this in the graph, it wouldn't make as much sense to you. And that's the same thing with the stock market. With the stock market, I am here to tell you that if you can learn how to read charts, you can get paid very, very well. Um, Learning how to read charts is going to tell you when to buy, but that's not nearly as important as it also tells you when to sell, right? It tells you when it's time to get out, when is it going wrong, and why. It also tells you how long, right? So it gives you a perspective of time frame. How long should I be in this trade? How long can I realistically expect to make $1,000 on this stock? And then it also gives you an opportunity to define your risk management tactics, right? If I get in at this level, at what level, how do I protect myself if it goes against me, which we'll talk about some of that stuff in the chart. So here is a stock chart of a company, and I purposely took the name off of this chart. But I want you to notice something. This stock was in its heyday trading at $140 up here. Type in the box, what stock do you think this is? I know you don't know, but just take a guess. I'll give you a hint, though. It's a technology stock. I'll give you a hint. It's a technology stock. And well, if I give you any more hints, you probably won't know what stock this is. But what they used to be really good at is email management on wireless devices. Right? So this is a wireless stock. I'll go ahead and tell you at least that it's a wireless stock. Jim says Nortel. The year is right down here. It says 2007. So in 2007, or let's just say 2008 roughly, this stock plummeted. Jim is the only one with a guess. No one else is guessing, huh? All right, so I will tell you what stock that is. I'm going to write it in very slow letters. That stock is BlackBerry, right? Reason I'm showing you this chart is once you read charts, you can see this thing sold off to here, then the stock ran back up, and what did it do? It couldn't hold and rolled over. This stock clearly told you that it was broken and it was time to sell. And ever since then, it's made these series of lower highs, and this is where the stock is at today, about $8.10 or $9.10. Now, but look back here though. If you own this stock, you were partying when this thing went from $40 over here. You see 40? You were partying when this thing went from 40 all the way up here to 140. But learning how to read this chart would have told you, hey, maybe it's time for me to take my profit right here at about $110, and it's time to get out. I want to show you another chart. This is another company that's in the wireless space, but I want you to notice something. Down here in 2008, when that other company was tanking, this company all of a sudden took off. And it took off from about, $50 or so, 50, 70, anywhere between 50 to 100, took off, and the stock went as high as $700 right here. What stock do you think that is? I guarantee you probably support this company. Everyone says Apple, right? That's absolutely correct, right? This stock is ticker symbol AAPL, which is Apple, right? And so this stock took off from $50 and ran all the way to 700. Now, do you think that there's a fluke that, let me go back. This stock around August 2008 plummeted, and then this stock around, August 2008 took off. Do you guys think that is a coincidence? Or if you knew how to read stock charts, could you have spotted that there's a new player in the market and that's also spelling trouble for these guys? Could you have made money on that? And now, if you're looking at this, I don't want you to think like, well, what are these lines? What is this stuff at the bottom? What I'm just showing you is a graphic representation of a company at the top of its game and how it lost steam, and then a new player who came into the marketplace and started to snatch away market share from them, right? So I want to look at some real stock charts for you, and let me pull this up right here, and I want to show you something else. And man, this is so beautiful once you learn how to read stock charts here. I want to show you guys the S&P 500. So if you look at the S&P 500 here, and I zoom all the way back, zoom all the way out. If you look way back here, this is 2011 or so. And you can see when the S&P 500 was up here at about 1300 level. When this thing sold off, well, let's go back even further. I wanna make sure you really get this. So this is 2011, right? So this is before the kind of the recession and all that stuff. This is 2010, so it was about 4 years ago. The market sold off, right? The S&P 500 is what we're looking at, which represents the 500 stocks that we basically vote on and look at and put inside of an index to say, or index to say, hey, these 500 stocks gauge the health of the economy. And right along here, this is one of my favorite times in history, because if you were watching or paying attention, when the market was selling off and all this stuff, all you heard in the newspaper was the market is over, take your money out, the economy is doing bad. Basically they told you run for cover. But why is it that the people who listen to the newspaper and CNBC or whatever news you watch in the morning, Fox, you people, those folks, at, let's just say this level is 1100. 1100. So around this level, they were telling you, don't invest. Stay out of the market. It's over. The economy is doing bad. President Obama doesn't know what he's doing. Healthcare isn't doing great. We're going into another war. Nobody's hiring. Let me ask you this. If that is true, if you get your information from them, why is it that the S&P 500, which means a collection of 500 stocks, ran from 1100 all the way up here to this 18,000 level? So, I'm sorry, 1,800, 1,800, whatever this level is. Why is it that every since then, and let me zoom in, why is it that ever since then the market has been in what we like to call an uptrend? So if the economy is truly doing so bad and you shouldn't be investing, if you're listening to that, you basically missed out on this nice little run from way back here from 1100 to 1,885. You missed a 700-point run. Now, when you look at this, notice that I got some lines drawn on the chart. There's a very interesting pattern that erupts. And you can see at these levels right here, these are great times to buy. You can see right here, these pullbacks to this area, great time to buy, great time to buy. Even recently, this pullback right here, great times to buy. Looking at that, when would you sell? Probably right here, maybe right here, if you're trying to get in and out of trades. So they give you some clear areas to sell. Even recently, if you look at what's been happening in the market, this is prices of the market. You can see the market has been ping-ponging. Runs up to this level, comes back down, runs up to this level, comes back down, runs up. Just with that little bit of information, when would you buy and when would you sell? You can see right here, this is March 4th. So 3/4 is the date, and you can see the date down here at the bottom as I scroll over. And then over here is 3/31, right? I mean, today right here is April 1st. But what I want you to understand is there are stocks that you could have bought here on 3-4. You could have sold here on 3-7, made some money. You could have bought again on 3-14, 10 days later. You could have sold right here on 3-21, 7 days later, made some more money. Oh, right down here on 3-27, you could have bought back in. And then right here on April 1st, which is, 4 days or so later, you could have sold and made some money. So what does that look like, with respect to certain stocks, right, in the S&P 500? There are certain stocks that behave just like the S&P. Look at IBM. I just want to show you something on IBM to kind of open your mind to learning this industry and learning what you're looking at. If you look at this stock, this chart of IBM, it looks like nothing special. To me as a trader, what I see is I see resistance right in this area, but I also see resistance, by the way, is a term, I'm not going to write it out. Resistance is when you should sell. Let me just say that. And down here I see something called support. Support is when people like the stock or roughly an area when they buy it, like to buy it at. So just off the little bit I've taught you, where would you have bought IBM? So I'm going to write IBM on this chart. I can't even spell. Where would you buy IBM? Well, you would probably buy right here, October. You would also buy right here, December. Not a bad time to buy right here, February 6th. So that was your most recent time to buy, February 6th, 2014. Had you picked up some shares of IBM at 172, so that's 172, IBM moved, let's just say you're selling right at this line, so somewhere here, to 190, right? That's 18 points you could have made on IBM, right? 18 points within, I don't know, it's about a little over 30 days. But just learning how to read this pattern. The other thing is, if you look right here, this is September 24th, right? So 9/24. When it sells off, it took from 9/24 to October 21st for it to bounce. When you learn to read a chart, it tells you how long you should expect for this to turn around. Does that make sense? So from 9/24 to 10/21, that was just short of, 30 days or 1 month, give or take. It told you about 30 days. So reason I'm sharing that with you, if I'm buying right here, how long can I realistically expect before it gets back up to this area over here? Well, if history is any telltale sign, right here was 12/13, so 12/12, and it took to about 121, or you can look here 17. Let's just take the 17 mark. That's about 30 days. Does everybody see that? It took about 30 days to get right back up there. 30 days. So if I'm buying here, I would expect it to take about 30 days. Look, from here to about here, 310, and then where is this area down here? It's 2.6. So this is about 2.6. I know there's a lot of drawing. But from 2.6 to about 310, which is about right here, it took about 30 days to get right back up to that point. I can't hear you guys right now because you're on mute, but if you're anything like me, a light bulb is going off and you're thinking, you mean to tell me, Jason, that if I learn when to buy, the best times to buy by reading this chart, you mean to tell me there are times that it will also tell me when it's time to sell? And if I can get good at identifying these sell areas, and I can get good at identifying these buy areas, I can make money. That is exactly what I'm telling you. You won't learn everything tonight, but that is exactly what I'm telling you, that the stock market gives off repeatable, predictable patterns that tell you when it's a good time to buy and when it's a good time to sell. Now, here's what most people do, unfortunately. Most people have this reversed. They see the stock when it gets up near this area, and here's what they do. Here's what the amateurs do. They buy right here. Then after the stock sells off down here, they sell and they say, you know what? I knew this stock market thing didn't work. I knew it was a trick. I should have never bought this stock, and you get out. Guess what happens as soon as you get out? Stock turns around and runs up, and guess what? You now think the stock market is rigged. You think there's a person on the other side of the computer watching you every time you pull the trigger to buy, and then when you get up here and get ready to get out, they're telling you to sell. And it's not that there's a person on the other side of the computer, it's that no one has ever explained to you how to pinpoint these pivot points and these buy levels and these sell levels up here and tell you when to get in and when to get out. And that's what I like to show traders. So I want to show you real briefly. I want to talk about some things you can do as part of your next step in getting comfortable with learning the stock market, getting familiar with it, and then I'm going to open the line up for some questions. But I want to give you some action items. And one of those action items, give me 1 second here. I just want to open up our website here, and I want to walk you through some things you can start doing today to get familiar with this. So my screen should be up in front of you. And this is my website, or one of our sites, thebrumreport.com, right? Here's what I encourage every person on this that's in the sound of my voice to do. Sign up for the free weekly Power Trades newsletter. What I do is I put out 3 to 5 videos a week for members, but I put out 1 video normally a week for free, just to get individuals familiar with my style, get you familiar with reading stock charts, get you familiar with how to pinpoint when to buy, when to sell. This was a stock we talked about that it ran BOFI. I'm going to pull it up in a minute, but this was a free stock we talked about on February 18th, and then on March 12th it really broke out. And I want to show you what that stock did. We talked about this stock back here, and we said, hey guys, I'm noticing it's in one of those channels. Notice that channel thing again, right? But once it breaks out of that channel, it's probably going to run pretty heavy. So we spotted this stock right here, February 18th, right? So you can see the date down here. February 18th is when we did our video on it. The stock went from $86 all the way up here to $106. And that happened on 3/17. So back to that old 30 days again, right? So the stock ran from 86 to 106. That was a 20-point move. Now, for those of you who don't know what a 20-point move would do for you, if you owned 1,000 shares of the stock and it moved $20, well, it's not hard to understand that you would have made $20,000. Now, keep in mind, to own 1,000 shares at 83, let's just say 83 bucks, 83 times 1,000, you would have had to have had $83,000, right? So that's not, for most people, You wouldn't have had 83,000 to make 20,000. I totally understand that. But there is something called options that would have allowed you to possibly do this same type of trade for about $4,000. There's something called options that would have let you done roughly the same type of trade for 4,000 instead of having $83,000. This isn't a course about options, but I just want you to know that there is an opportunity for you to get involved with trades like that, even when you don't have that type of money. And last but not least, before we open up the call for questions, comments, concerns, I'm putting together a new course, and it's going to be called the Power Stock Trading Course. It's not available right now. I'm writing the course, I'm designing the course, and it's going to be designed to take you from amateur to confident trader. It's going to talk about candlestick charts. How do you draw those support and resistance lines? How do you find these stocks that are in between these ranges that break out? How do you trade them? How do you protect yourself against the downside? And so you've probably seen this new logo pop up around the web. You've seen powerstocktrades.com. It's an opportunity for you to get on the email list and be alerted once we release this new course that's going to come out. And I'm going to have some special pricing for those of you on this that are on the email list. It's going to be really aggressive pricing because I'm all about teaching people how to get involved in the market at a realistic price and how to look up a year, 2 years, 3 years, 5 years from now and have a different financial future for you and your family. So I'm going to open up the call for some questions, and you can either type it in the box, you can type it in the Q&A up top. I'm going to unmute the line. You are now unmuted. You can also ask verbally if you like. So we'll take the next, I don't know, 15 minutes or so and just do Q&A. And type in the box if you can hear me still. Let me know that I haven't lost you. Or if you have any questions, type it here and let me know that you can still hear me. Or if you have audio, feel free to ask any question you may have. Eileen says, what kind of trading do you teach? So Eileen, my style of trading, I teach 30 days or less how to get in and out and grab $500 to $1,000 in profit. That is my style of trading. There are also techniques that can be applied to holding stocks longer if you want to, what we call a trend trade. So let's say you want to buy stocks or buy things that you can hold for 6 months. I also teach you how to buy things and hold it for 6 months. So let me show you one of those techniques, Eileen, on how you might buy something and hold it. So if you guys see my screen here, let's look at a stock like Google, for example. So Google, once it broke, let me see if I can zoom in. So if you notice, we looked at both. He doesn't just have the same pattern as both. Look at Google. Look at these predictable times when you can buy Google. So you would buy down here, you would buy right here, you would buy right down here. This is where you would sell, this is where you would sell, this is where you would sell. Let's say you don't want to make money every week or month, you don't want to manage it like that. I'll show you how to use these moving averages to stay in the trade on Google. So we would use this until it breaks the blue line. So right here is when we would get out of this stock, and then you would get back in above that line. Then over here you would get out again. But if you notice, using that method, you were in from October 2003 all the way to about January 2014. So we teach that. Now, I see you said, what about day trading? Day trading is not my style. So some of the things I teach can be applied to day trading, but that's not my style. I still work a job. I still run other small businesses that I don't have time to be in front of this thing in and out from 10 a.m. to 4 p.m. That's just not my style. But the probably people out there is just not me. That's not my style. My style is more, let's find a trend, let's get in, and in about 30 days, let's collect $500 to $1,000 or however much you want to put up. So Jim says, Jason, so you're more of a swing trader using moving averages and et cetera. So absolutely. I use moving average. I use Bollinger Bands. I use stochastics. If you're looking at my screen, you can see I use Bollinger Bands. I use moving average. I use stochastics, which is this stuff you see down here. So there's a lot of different tools that I use, and that's what I teach you how to read those as well. Eileen says, so is this options? Well, Eileen, you can actually buy stocks or you can buy options. What I teach how to enter both, but you could do the stuff buying your straight stock, or you can buy options. We didn't train on options in this seminar. It wasn't what this was about, but I am going to do a seminar called Intro to Options, where I'm going to introduce you guys to options. It'll be a free webinar as well. So Sankeet said, what are your views on using Bloomberg software? You know, I don't really know what Bloomberg software does, so I can't really speak to it. If you want to give me a little bit of insight what Bloomberg software does, is it news? I don't know what it is. I can't really speak on it. I don't know what it is. I don't use it. Eileen says, at the price of some of these stocks, you need quite a bit of money. So Eileen, let me show you something. That's a great analogy. So you're saying, hey, some of these stocks you need a lot of money. So Eileen, I have scans. So if you're looking at the screen right now, look at some of my scans I have. So I have my 24/7 watch list, stocks that I watch all the time. But Eileen, I have something called where is it at? Where's my low price squeeze play? Bollinger Band breakout low price, Eileen. These are all stocks that are under $30. So for example, I might talk to my members about this Cisco stock and say, hey guys, look at this tight squeeze. It's getting ready to break out. I'll pinpoint when you could buy that. Ford Motor Company, look how this is breaking out of this Bollinger Band. Now you probably don't know what a Bollinger Band is right now, but I have a scan that'll find stocks that are breaking out that are low price. So I'll go through these for my members. We'll look for stocks that are $30 and under. You know, most of these are 20 bucks. This is an $11 stock. So for example, Eileen, on this stock, it's $11.44. I'll switch to this view right here and I'll say, hey guys, I'm looking for a move back to about $12.48 on this stock. We'd probably get in somewhere around this $11.44 and we can make $1 on this trade. Now, if we made $1 on this trade, if this stock is worth, let's just say $11 for easy math, and you bought 500 shares, so 11 times 500 here, you would need 55,500 bucks, but you can make potentially $500 on that dollar move, right? So that's just about 10% return maybe in 30 days. So you got to ask yourself, when's the last time you had a 10% return in about 30 days, right? Also, when I teach you options, I teach you how to do this same trade, not needing $5,500, but maybe using $1,000. But again, that's a different seminar. I'm going to be posting about that one as well real soon, about how you can take small money and turn it into big money using options. So hopefully, Eileen, answered your question. Jim says, do you factor in sector rotation? So absolutely, Jim. If you look at my scans here, I have a scan that says, where is it, brown spider sectors. So I'll go through, let me change this view here. So I'll go through these sectors, and I'll kind of, you'll see I have lines drawn. So I'll say, what is the industrial sector doing? First I'll say, all right, These are my buy points for the industrial sector. If it's at a buy point, then I'll drill down and look at industrial stocks. I'll go to my home builders. I'll notice, if you notice home builders, look at this support line. So these were the times I would have bought any tag of this line for my home builders. Then I drill down to my home builder stocks, say which stocks are behaving like that while I'm looking at that sector. So Jim, I hope that answers your question. Do I factor in sector rotation? And let me see if I can find a sector where money is rolling out of it. So look at this sector, the metals and mining. So this sector is dead to me. I would not be buying in this sector because look how it sold off. But look how, home builders or something like that went up. So I unmuted the line, so you are free to talk so we can hear you talk as well. But I will mute it back if no one wants to use it. Jim says, I know your newsletters include low price stocks under $10. Yep. Well, they're usually under $30. Sometimes there's stocks that are $10 or cheaper. But with options, when you learn how to trade options, the price of the stock is not a factor. Sankeet, are you going to teach about shorting stocks? Absolutely. In the Power Trades course, we're going to teach you how to sell puts or buy puts to play the downside of the market. So if I'm making money when the market's going down, it's usually by buying puts and playing the market to the downside. So if you're not familiar with this, there's a way for you to make money even when the market sells off. I'm going to mute the line since everyone's typing.
You are now muted.
All right, so there's a way to make money even when the market is going down, guys. Paolo says, after learning charts and reading a few books, what would you recommend the next steps to keep getting better? Well, I really believe I laid it out in the beginning. That's finding a coach, right? Whether it's myself, whether it's I don't want to say your neighbor. It has to be somebody that's made money in the stock market, right? You need to find a coach or some type of accountability partner that you can bounce ideas off of. Secondly, be part of a trading community, whether it's my forum, whether it's, you're in our meetup group, and then subscribe to, you just have to be a student of the game. You have to keep wanting to get better as far as reading charts, bouncing ideas off people, because I think after a while the information is the same. Everything else becomes emotion, greed, fear, how you're handling those things. And those are some of the only things that can be handled by being part of a community or having a coach to say, hey, you're getting greedy. I think you should pull out of this trade. Let's lock down our profit. Let's do this so that we minimize our risk. Don't be scared to buy right here. We've seen this before it bounced. So some of that, after a while, just becomes being part of a team, having a coach, being part of a community. Jim says, do you make plays off of consolidation? Absolutely. I make plays off consolidation. One of my favorite consolidations is when a stock consolidates to a 10-day moving average and then breaks out, or something called a flag pattern, which we're going to talk about in the Power Trades course. Sankeet says, from my understanding, options are very risky and not everyone is eligible to trade using options. Is this true? So let me put it this way. Are options risky? Well, driving a car is risky if you don't have a license, and if you don't know that a red light means stop and a green light means grow and a yellow means yield or proceed with caution. So it's the same thing. Options are risky if you don't know what a call option is, if you don't know what a put option is, if you don't know when to buy a call or a put option. Absolutely, that's risky. When you say everyone is not eligible to trade, I only recommend brokers that make it very easy for anyone to get approved. My broker of choice happens to be Options Express. I don't know who your broker is, but there's not many people that dealing with the broker I use can't trade options. And when I train on options, you're confident enough to pull the trigger. And let me put an asterisk in there. You should be paper trading anyway, before you ever place a real trade, you should be putting in practice slash real paper trades. You should be putting in real paper trades. All right, so let me be clear. A real trade is a trade you would have made had you had the money, but I want you to do it on paper. So you should be real paper trading. I don't like to say you should be practice trading, because when you're practicing, you do stuff you wouldn't have done. Oh, it's just a fake trade. Let me just buy it anyway and see what happens. I want you to make a real trade you would have made had you had the money, but practice. And then you'll totally be confident to trade options. And you shouldn't have a problem approaching your broker about upgrading your account to trade options. But options are definitely for big boys. That's where the big money is made. And it's not for the faint of heart. But if you can learn it, it's like having a tool belt. If you only know how to buy stocks, think about it. Think about it this way. And if you're watching my screen, think about it this way. If you only know how to buy, when do you make money? You only make money when the market goes up. But does the market always go up? No. You can see right here, the market goes down. The only way to make money when the market goes down is by shorting stocks or knowing how to trade options, which are buying puts or selling covered calls, different things like that. If you don't know how to do that, you are limiting the amount of tactics you have to make money in the market. So I actually think not learning how to trade options is more risky than learning how to trade it, if that makes sense. Jim says, shouldn't one become very well versed in one area before expanding out? I was always taught you want to have a major and you want to have a minor, Jim. So that's how I'll answer that question. You want to major in buying bull calls, covered calls. Maybe you want a minor in selling covered calls or selling puts or playing the downside. But you definitely have to have a major, and then you want to have a minor. But if there's anything you need to be an expert in, is reading the charts, because the chart is going to tell me I need to buy right here, and the chart is going to tell me, okay, the market is getting overbought. I need to sell right here. Everything else is determining which option should I buy, what time frame should I buy. But that all is a component of learning how to read the chart. So if you need to become an expert at anything, it's reading the charts. He said, thanks. Last question. What books would you recommend regarding the stock market? Honestly, I really don't recommend books, guys. You know, to me, recommending a book is equivalent to me telling you, go pick up a book on Chinese and then read it and tell me how to read and write Chinese. It's like it's a foreign language. I'm looking at something I don't understand. So I'm not a big component of books. If you want to do anything, I say find you a coach, find you a mentor, become part of the membership. But that's going to be a lot faster in increasing your knowledge than just reading a book. If I just had to pick a book, one book I read back in the day was Day Trading for Dummies. So I read Day Trading for Dummies. It taught me a lot, I would say, at that level. But at the level I'm at now, a book really wouldn't. Books don't help much. It's seeking out mentors, seeking out people who make more money than me, seeking out people who have different strategies and risk strategies than me. And most of the time, they didn't write a book about it. Most books just, this is what a stock is. This is the stock market. You can make money if you buy. It's not a big book, guy. You learn this stuff by coming to seminars, by coming to classes, by being around other traders. That's how you learn this game. So any other questions as we get ready to wrap up the seminar? Eileen says, do you trade off futures at all? Aline, I do not trade off futures at all. I find the futures of no benefit to the way that I trade. The future does not affect this support line I'm seeing on the chart, this support area I'm seeing right here on the S&P 500. And what I find most of the times is the future says one thing, and in the moment the market opens, it does something different. So I'm not saying there aren't people who successfully trade the futures. I'm just saying I'm not one of them. It provides no value to me. Jim says, what percent of time do you short in a bear market? So Jim, if I had to pick a percentage, I would say 5%. I 5% short, and I don't really short. I buy puts. But the reason I don't short that much, here's the reason why. I mean, look at this S&P 500 chart. Long term, this chart is in an uptrend. So from like right here, maybe I would short it because I see it hitting this resistance. I'll short it, but I'll get out right here. But the reason I don't like to short right here is because long term it's in the uptrend. So I would rather just sell right here and I'll wait for my opportunity to buy. So more often than not, when this stuff right here is going on, I'm just sitting on the sideline saying, hey, if it comes down to here, if it comes down to here, if it comes down to this level, then I'll buy versus saying, ooh, I'm going to make money down here, down here, down here. You can, but I'm just not a professional at doing that unless it's really bearish or, let me zoom in here. When something like this happens, where the market bangs its head, bangs its head, bangs its head, and then I get a sell-off the next day, I'll short this down. But the moment I see it starting to go sideways, it's like I'm out. I am out because the long-term trend is up. So I don't short that often. Great questions, guys. So we got about 2 more minutes, and then we're gonna wrap up. And again, any question you want to ask, no question is a dumb question. This seminar is for you. Jim says, when is the next live meetup? Well, Jim, I can tell you this. Now that the snow has melted and these winter storms are kind of behind us, we're looking at gearing up for some meetings. Either we might even kick one off as soon as mid-April, or we may wait to the first or second week in May. But we're definitely going to get back to some live meetings so we can meet face to face, get some of these questions answered, and talk about the market. Awesome. You'll be one of the first to know as long as you're on the email list and you're part of the group. So if there's no further questions, I'll take 1 more, 2 more if you got it. If not, I don't see a question come through here. We're going to shut down, and I really appreciate your patience in the beginning with the technical difficulties. So is there any other questions? Oh, no problem, Jim. I appreciate you, buddy, jumping on the webinar and being here with us. Paolo, thanks for jumping on the webinar. Sankeet, thank you, partner, for joining us. We got Intro to Options coming soon. Eugene, glad you can join us, Eugene. Thank you. Eileen, glad you can join us as well. And this doesn't end it. This is the beginning for most of you, right? So if you got more questions, how do I get started? Where do I start paper trading? Can I open up an account and just practice trading? There's some things that I can point you in the right direction if you're not ready to take the big step, which is having a membership subscription or having a paid mentor. There's definitely some things I can still point you in the right direction to get you acclimated with the market so that when you're ready, you'll be very prepared. So don't hesitate to shoot me an email. My email address is jason@thebrownreport.com, and you can find that on the website as well. So thanks, everybody, and then I'll see you guys on the next meetup.